Hey guys, what's up? Welcome back to another training video. Dave Rodriguez here, one of the head traders inside the Alliance community. Today we're going to talk about wedge patterns. Some people, call some of them flags. We'll go over all that here in just a minute. Okay, here's our first type of wedge. Wedges can serve as either a continuation pattern or even a reversal pattern, depending on what type of wedge it is. This is a rising wedge. Some people call it an ascending wedge. It's formed when price consolidates between an upward sloping support and an upward sloping resistance line, basically. Here's the slope of the upward support right here. Based on this red line, support is always at the bottom. And here's the resistance line. You see how price is consolidating in between and getting smaller and smaller, getting squeezed before the breakout. Now, there is a chance that this could break up, but normally this pattern would break downward. This would be a reversal pattern. So when price consolidating, we know that a big splash is coming. When price gets smaller and smaller, we know a big splash is coming. So we can expect a breakout, like I said, sometimes to the top, but we take this trade as a reversal pattern. A rising wedge forms after an uptrend. So you see the uptrend and then the consolidation, which means the buying power is the buyers are losing power, and people are trying to figure out where they're taking this trade next. Majority of your traders are going to see this as a bullish reversal pattern, or bearish reversal pattern. On the other hand, if this formed during a downtrend, this could be a whole different story. We'll go over that in just a minute. So, how to trade this pattern? If you see this going inside after an uptrend, start to consolidate, you draw the line at the top after 2 points. You draw the line at the bottom after 2 points. You're making higher highs faster than you can make. You're making higher lows faster than you can make higher highs, which gives you this consolidation picture here. So the distance between here, which is one of your first points, and here, your second point, would be the distance that you're going to fall after the breakout. So if a candle breaks outside, you're going to see from after that candle, you're going to see a fall of a distance between here and here. Okay, I'll give you guys a good example of what that looks like. And here you go. So this is what a breakout would look like. I got these pictures online. It was a great example to be able to show you guys on a nice little picture illustration rather than trying to find it on the chart and you guys trying to see it through. So this makes a nice move down. This is how you would trade a rising wedge or an ascending wedge. So let's talk about another wedge. And this is going to be a continuation pattern. Remember, this wedge here is a reversal pattern. Now we're going to talk about a wedge that could be a continuation pattern. Okay, next is a flag pattern, what I like to call, or a falling wedge. Okay, this happens in a downtrend. You're going to see a slight pullback, okay, a slight bullish pullback, which you see here. This happens in a downtrend, okay? This is like a reverse flag pattern. Okay, so this would be the flagpole here, or this would be the flag here, which you'll see is consolidation between 2 points. You'll see higher highs, you'll see higher lows. It's just like the ascending pattern we saw earlier, but it was a bullish trend. So a bullish trend came up and kept ascending, and then consolidated, and then we saw a fall. Okay, in this situation, this is a downtrend, so this would be a continuation pattern. If we see a downtrend, and then a slight retrace. There's many different tools to use to determine how to trade this, but you'll see the points at the top. You draw the line at the top, you draw the line at the bottom. The line at the bottom, again, is going to be steeper than the line at the top. You're going to see these lines be respected, pinpoint in most cases. And then after touches on both sides a few times, you're going to see a breakout from the top to the bottom. Again, it'll be the distance from here to here. And once you see that distance from here to here, you'll then draw that distance from here to here, and that should be your breakout. You take the trade after the breakout on this end here, because again, this is a continuation pattern when the last thing we did was a reversal pattern. So I'll show you an example of the breakout. So here's the examples of the breakouts, guys. Again, another brilliant illustration that we found online. And it shows how price went right past it, but you have to have a target. And your target normally for me is right down in here on these last two candles. But it equally meets the measurement tool that we always follow. So there's the breakout, the measurement tool goes here, and we went nice past it, you know. So that's how you're going to trade a continuation wedge, okay? Because the trend is going to keep continuing. It's going to keep going down instead of a reversal and the price going the other way. Okay, now we're going to talk about the same patterns, but a falling wedge and then a bullish flag. Okay, right now we have a bearish flag pattern or wedge, a falling wedge here. Okay, and this is what we call a reverse flag pattern because, you know, here's the flagpole and here's the flag. Okay, reverse flag pattern, typical you know, pattern that we trade here in the markets. Okay, guys, and here is a falling wedge or a descending wedge. This is in a downtrend. You'll see price consolidate. The top line will again be way more, much more of a decline in this case because before it was much more of an incline, a much more sloping bottom support. Now it's a more sloping top resistance. That makes sense, guys, because now this one isn't as serious of a decline as the top because this is a falling or a descending wedge. So now it's the reverse. So the top's going to be more seriously of a down incline and the bottom's going to be more of a support here. At the bottom, you'll see price want to break out to the top because this is, again, a reversal pattern. Once you see this falling wedge or a descending wedge, you are going to look for the bottom. You're going to let it hit a good 3 times. And then you're going to look for the breakout at the top. You'll measure from here to here, and that should be your breakout from here to here. You should see the target enter this area in here, and that should be a good target for you, you know, right in that area. So you'll see it between here, and that'll be the measurement. Let's show you guys an example of what a breakout looks like. Another brilliant illustration that we found online. And here's that breakout, guys. Again, I told you the target would be right in this area here because the measurement from the top of this to the bottom of this, you know, the break in to the consolidation, you know, the fall into the consolidation, that'll be your breakout. And it went nicely past that, but, you know, we don't be greedy here, guys. We find our target. We know it's going to hit that area. If it passes it, great. Take some money off the table. If not, close the trade and be satisfied with your day. That's why these charts patterns are so important because you can, if they play out correctly, you see the breakout, you see the retest, an entry there takes you to the top. That is a nice breakout, depending on which chart you're trading from, hopefully a 4-hour or above, and you will have a nice, you know, a beautiful profit margin if you trade these chart patterns properly. We're teaching you different chart patterns all the time. Follow the rules. Don't make something fit that doesn't. If this doesn't fit, you know, in these trends, these trend lines don't fit, it doesn't consolidate more and more and squeeze, then it's not what it is. You know, this could have been a double bottom here, but it didn't. It didn't fail. It didn't break the neckline, so it's not. Now it falls into a descending or falling wedge. So different patterns don't play out, and then they turn into other patterns that do. You just have to be patient and let them play out. So I've got one more to show you. This is going to be a bullish flag pattern. Instead of it being a reversal pattern, it is a continuation pattern. Okay, here's our final example. This is a rising wedge. Okay, I also call this a bullish flag pattern. Notice, guys, that this looks like a flag. Here's the flag pole right here. And then here's the flag. Okay, that's why I call this a bullish flag pattern, or it's another rising wedge. Okay, you'll see price consolidate at 2 points. You draw the line. It should respect that going forward. Same thing at the top. You draw 2 points together and extend it out. You'll see the flag tighten in here. It's no more than a retrace. After a nice rally on an uptrend, it's no more than the buyers and sellers, the buyers taking a break, you know, buyers and sellers figuring out where they're going to take the market next after this uptrend, okay? And you'll likely see a nice breakout to the upside, and that breakout will be from this point to this point. I know it seems repetitive, but this is how it's done. From this point to this point, your target's going to be right up in here. You guys see a pattern. It's always that high. You got lower lows and lower highs. Now remember, guys, before we were seeing higher highs and higher lows. This is kind of the opposite, okay? You're going to see lower highs and lower lows in this flag pattern. Bullish flag pattern. It's a continuation pattern, so we should see it break out to the top side. Let me show you an example what that looks like with another brilliant illustration we found online. And there it is, guys. It goes past it, but notice it comes back down in that area. So we'll probably see another retrace before it breaks out again. It could also retrace all the way down and retap this breakout point, maybe in this area. But to guarantee your profit, get out, guys. Get out of the trade, let it come back down, maybe get back in the trade, and then let it go back up if the market lets it do that. Day trading is about getting your profit, getting in, getting out, trading the pattern, and then looking for the next pattern to trade. Don't get greedy. That's the biggest thing. Yeah, so just don't get greedy, because it's going to make you stay in the trade. Before you know it, you're going to go to the bathroom, come back, and Bitcoin dumps, and next thing you know, you lost money. So trade the pattern, get in, get out of the market, and you'll see a lot more success. But trade the rules and make sure you're not jumping into a trade that hasn't broken out yet. This candle here is the breakout candle. Notice the entry here, popped up, gave you everything you needed. So this is all we have for you today. I hope you enjoy the video. We'll see you next time on the next training video. But anybody who hasn't got that free ebook, make sure you go down in the description below. You're going to see a link. It's the bitcoinconsumerguide.com/YT. Click that link, get your free ebook. It's got all our best kept secrets and strategies, how to trade these patterns, how to do all kinds of things that we teach you in these videos, and then all kinds of other cool stuff that Cody Sperber, the clever investor himself, will explain to you. So once you guys check that out, you guys will be super happy. So we'll see you on the next training video.